Hi ladies and gentlemen, welcome to SA Accounting Academy. Here's a short clip on one of our previous webinars. I hope that you really do enjoy it.
Good day to you and welcome to this webinar dealing with IFRS 5, non-current assets held for sale on the one side, and then also discontinued operations on the other side. My name is Anton van Wyk and I will be presenting this CPD learning activity. All right, so as I said, welcome to this webinar. We are dealing with IFRS 5 today. This standard is not dealt with by many people. I don't think the majority of accountants really deal with IFRS 5 regularly, and yet it is quite an important set of principles relating to an asset category that is actually a complete different asset category from the rest. So what we do is the moment that we make that decision to dispose of a non-current asset, and we have not yet disposed of it as at a reporting date, for example, we need to actually take this non-current asset and reclassify it into this asset category called non-current assets held for sale. All right, so we would obviously have to understand when that can happen, how that happens, what the impact would be, etc. So remember that in accounting treatment, we look at recognition, measurement, presentation, and disclosure. Now, the recognition here is not a big issue because what you must understand is that these assets that you hold for sale or disposal, these assets are effectively already in the balance sheet, the statement of financial position. So those assets actually are just reclassified. So what you'll see is when we look at the recognition part of IFRS 5, the focus is on the reclassification component. So how do we take existing non-current assets, reclassify them in terms of the principles of IFRS 5, and then show them as non-current assets held for sale, which are effectively current assets. Okay, so that's the important part. So under recognition, we focus on the classification criteria in terms of IFRS 5. So how to reclassify. Then under measurement, we obviously need to know how to measure these assets that are now non-current assets held for sale, or of course disposal groups held for sale, because we don't always decide just to dispose of one asset. We can decide to dispose of a group of assets in one single transaction. So then we also have to decide how to measure that particular disposal group. And then when it gets to presentation and disclosure, presentation on the face of the financial statements and disclosure in the notes to the financial statements, we have to make sure that not only do we present our non-current assets held for sale or disposal group held for sale separately in the statement of financial position, which is the balance sheet. I think that's quite obvious because we are looking here at assets that are reclassified into another asset category. So from a presentation point of view, we know that we'll have to present these assets in a different line item. But if this asset, or more likely the disposal group, also represents a discontinued operation, then there's also presentation as well as disclosure consequences for the discontinued operation, and that we'll then deal with at the end. So looking at our agenda, I just want to give you an overall introduction to the standard. Then obviously in respect of recognition, look at the classification criteria, the measurement requirements of IFRS 5 once you have reclassified non-current assets into IFRS 5, then the presentation and disclosure, as we've just said, because there will be consequences for the statement of financial position. That's the easy one. But then also for the statement of cash flows, and then also for your income statement, where you are going to start to distinguish between continuing operations and discontinued operations if your disposal group that you are holding for sale actually satisfies the requirements of being a discontinued operation. So the presentation consequences on the statement of comprehensive income can actually be quite interesting. But first, we would have to tick the box of a discontinued operation. Otherwise, there would be no presentation impact on the statement of comprehensive income in respect of assets held for sale. All right. Lastly, the income tax implications. I don't think many people really, think it through that far, but you'll see when we discuss this section, there will be income tax implications. Now, the obvious one is when you actually sell that asset, then there will be, a recoupment of capital gain, of capital deductions, capital allowances, tax deductions, etc., that have been granted on these assets, and potentially also capital gains tax, depending on what the proceeds or the selling price of this asset would be. So those are the actual tax consequences of an actual sale. But the one thing that you mustn't miss here is that IFRS 5 focuses especially on non-current assets held for sale, not non-current assets that have been disposed of already. Yes, that's a part of IFRS 5, but many of these assets, the majority of the focus here is on those assets that are still sitting in my balance sheet as at the reporting date, but they are held for disposal. All right, so that's why that is important to realize, is because there'll also be deferred tax consequences for some of these assets that are reclassified into IFRS 5, because the way that you recover the carrying amount of that asset changes from use to sale, and therefore the actual tax consequences in the future will change from wear and tear deductions, for example, versus depreciation, and that is what you calculate your deferred tax on when the asset is recovered through use. Then you compare wear and tear versus depreciation, etc., and you calculate deferred tax. But when you turn it into an asset held for sale, then your future tax consequences change to those relating to a disposal of an asset, as we said, which entail basically a possible recoupment of tax allowance granted up to that point, and potentially capital gains tax. And that means that my deferred tax must obviously be adjusted to reflect that as well. So we'll also just quickly investigate that at the end of the webinar. All right, so if we start off with our introduction to IFRS 5, pervasively, the objective of this standard is to specify the accounting treatment for non-current assets held for sale, or if it's not just one asset that you hold for sale, it is also a disposal group. So during this webinar, where you see that the term DG, that stands for disposal group. So it's the accounting treatment, remember, recognition, measurement, presentation, disclosure, in respect of either a non-current asset that you hold for sale, or a whole group of assets, meaning a disposal group that are going to be, all of those assets, and potentially even the liabilities that relate to those assets, will be disposed of together in respect of one single transaction, and that will then be a disposal group. So we need to understand the accounting treatment for that. And then on the other side, as I said, when we've dealt with accounting recognition and measurement on the one side, the presentation and disclosure, if that asset, which is unlikely to be a discontinued operation when the asset is held for sale on its own, but when you start looking at a disposal group, that disposal group definitely has the potential to also satisfy the definition of a discontinued operation. And if that discontinued operation is, number one, either it was disposed of during the current year, so there's nothing left of the discontinued operation, but there will still be presentation and disclosure requirements in respect of the discontinued operation. And secondly, if that discontinued operation is still present at the reporting date, there will also be presentation and disclosure requirements in respect of that discontinued operation.
I hope that you enjoyed that video. For more of our webinar videos, go to www.accountingacademy.co.za. Thank you and have a lovely day.